Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes only. This is not financial or tax advice. So today I want to talk about two really cool Bitcoin-backed equities called Stretch and SATA. These are both high-paying, high-yield equities that are designed to stay at $100 per share. And both equities recently reached $100. So the whole purpose of Bitcoin Borrow Die is to be able to generate income through perpetual loans against our growing Bitcoin stack. This is a great way to bring in income that is tax deferred. Also, we could look at other products like Stretch and SATA, where if we purchase them at $100 per share, they pay out about 10% per year, paid out monthly, and that is return of capital, so it's tax deferred as well. These are kind of different ways of generating income through our Bitcoin holdings. And when we kind of think about our portfolio, we have Bitcoin in the saving bucket, we have the growth bucket where there are things that we think can grow faster than Bitcoin, and then a bucket for income. We need some type of income generation. That's where Bitcoin loans, Stretch, and SATA live and belong, and I will talk about them today. So what's really interesting about Stretch in particular, it's recently hit $100 per share for the past couple of weeks here. So on the left, this was from January 12th, about a week ago, where MicroStrategy announced that they purchased 13,000 Bitcoin, which is just a boatload of Bitcoin. But about $110 million of that came from Stretch, and then about $1 billion came from their common equity. And then this week, yesterday, Saylor tweeted out bigger orange, so we're expecting an even bigger buy, so more than $13,000. And Stretch has been at $100 per share for the past like 7 trading days, and hasn't really fluctuated very much. So we should expect to see more than $110 million out of Stretch. And then what is Stretch? What is SATA? So again, these are perpetual preferred equities that are created by Strategy and Strive. They're two different Bitcoin treasury companies. And the idea is they want these to stay at $100 per share and not really move, basically just stay the same and pay out a high dividend forever. And the companies take on the risk of paying out the dividend, and then it's backed by Bitcoin and Bitcoin appreciation. So kind of the yield mechanics here and how does this work? So again, these companies want to keep these at about $100 per share. So we have this line here. So how do they actually do that? So to get it at $100 per share, these both IPO'd under $100. They would increase their dividend over time. So I think Stretch came out at 9% originally at par, and now it's 11% at par. So as they pay a larger dividend, they get more demand. And when the share price is less than $100, that demand starts to push it up. So then what happens in the inverse? What happens when there's more demand and the price starts to go over $100? That's where these companies have an ATM function called at the market, where they can sell shares. So they'll sell shares into the market to keep the price at $100. So if it goes above 100, they're selling. If it goes below $100, they're increasing the dividend. There's a few other bells and whistles to this as well, but that's kind of the main things. But the point is they want to keep this flat at $100 per share and just pay out a large dividend over time. And then whenever they sell shares here, when it's above $100, they buy Bitcoin with it, which is why it's been so interesting over the last week or two that Stretch has been over 100 or at $100 per share because Strategy has been selling, and SATA is now up to $100 per share. So like I was just saying, we can look at this over time here. So this is the stretch price since July 30th of last year. And then if we look over here, we're basically right around here at the new year, pretty much all of 2026. The price jumps up here to $100, then it's basically just flat. That's the orange line. And then for this gray and green bars below, this is the volume that's trading in the market. So when we see it at around $100 per share and there's big volume, we can assume that there's demand coming in, and then strategy is selling into the market to keep the price around $100. And then they take that money and buy Bitcoin with it, which is that big $110 million buy we just talked about. And also shout out to Stretch.live. They have really great charts. Go check them out. That's where I screenshotted this from. And then kind of what are the core advantages for us? We get a huge yield, about 10% plus yield, and a flat stable share price. Low volatility. They want to keep it around $100 per share without it really changing at all. And then tax-deferred return of capital, tax efficiency. And then kind of just looking at the landscape of yield here. I mean, you can see that SATA and Stretch just blow the market out of the water in terms of yield and how much it'll pay. I mean, high savings yield, this is really generous here. And then like a treasury bill, maybe like 4%, 4.5%, right? So they're paying more than double for all of this. And if you consider Bitcoin, you know, a safe asset, the hurdle rate, it's almost close to risk-free. It's very high yield for very little risk. And then kind of just looking at this over time, so like the power of $100,000. If you buy $100,000 of Stretch or SATA, you're generating about $12,000 every year in passive income. It's like $1,000 a month that they will pay out into perpetuity. So this money could be used to finance loans from Bitcoin Borrow Die. It can be used for really anything, but it's just money coming in passively again. So this kind of comes from that income portion of the portfolio. And then just looking at this flywheel over time. So this is the market cap of Stretch. So every time it gets above $100, again, strategy is going to sell shares into the market, which increases the market cap. So you can just see this thing sucking in capital, and especially right when the new year changes, how much of a big jump this is. They are just going to pull in just an ungodly amount of money into these funds, because like there's so much demand for a stable price and a high yield. And these are new products. I mean, I think Stretch's released last year around July-ish, and SATA might be 2 months old, give or take. Like these are not old products, so people need to learn about them, need to find out about them. But when they do, it just pulls in capital, tons of capital inflow. And these are really strong companies, Strive and Strategy, that they're not going to sell their Bitcoin. They're just going to hang on to it like forever. So it's just 13,000 more Bitcoin off the market that aren't coming back. So it just tightens the supply. And whether it leads to supply shock or whether it's just like a gradual thing or how it goes over time, they're just like taking coins off the market. And then just global validation. We'll see these products in other markets. I know MetaPlanet has interest in doing something like this. They released one more similar to Strife, which is a different perpetual preferred. But we can expect, for all these Bitcoin treasury companies, we can expect some version of this in each market, because it's a repeatable process. The code has been cracked, so to speak, and there's enormous demand. And all these companies, all of these equities are pulling in capital, and the purchasing is going towards Bitcoin. So I just wanted to kind of walk everyone through Stretch and SATA because both of them, there's two of them now in the States that have hit $100 at par. So again, when the demand comes in at $100, it starts to push the price up. And to counteract that, these companies are issuing and selling shares into the market. And then with the money raised from that sale, they buy Bitcoin. So we should see a really big buy from Strategy tomorrow. And as always, if there's any questions, visit bitcoinborrowdie.com, email me, tag me in the post, and I will see everyone next week.